Bank account rates are dropping for the retail banking side. Question is this the start of a mega trend or not of rate cuts? Up first, UOB, they've announced that they are cutting the interest rates for their flagship savings account UOB One. OCBC and DBS have said no changes for their retail banking product, but actually OCBC has actually cut their premier banking offering. I'll cover that in a quick while. Then subsequent to this announcement, STARR has announced that they'll be cutting their savings account rates also from 1st of May. So today, I'll share with you quick updates and what are important changes, because you will definitely be using some of these banking accounts, correct? And if you are looking for a new banking account, what I'll choose if I'm in different income groups. So if this topic interests you, continue watching. Hi guys, welcome back. Let's start with some survey findings. How about that? Up in my Telegram group, I've actually asked which are possibly the popular bank accounts for high interest. UOB One was clearly voted as the champion, correct, with 45% of votes. In second place is OCBC 360, and DBS, unfortunately, is a far third place. Now, just now we mentioned about STARR's savings account, right? It's gotten actually one vote, so I think it's not too popular yet. And if you'd like to see these findings, look for links below to join my official Telegram group, because inside there, you will find constructive financial discussions. So the question is, why is UOB One account so popular? Or maybe you are a customer of UOB One account also. Let's recap a bit. UOB One account is quite possibly the best paying high interest account out there, as long as you have a minimum 500 per month in terms of spending with UOB debit or credit card, and you have actually your salary being credited to UOB One account. You would get a chance to earn up to 7.8% of interest. Of course, this 7.8% is always very misleading, because if you were to see the effective interest, that 7.8% only applies to the highest tier. So let me pull up a summary table to show you the before and after. Up until 30th April 2024, UOB One account for the first 100,000 would pay an effective 5% per annum. That again factors in this 7.8%, which belongs only for amounts 75,000 to 100,000. But what I'll review next to you are changes from 1st of May 2024. You would see that the effective interest is now cut to 4% per annum, which doesn't seem too much of a difference. However, take note again, the way it's presented suggests that you need to keep 150,000 to yield this 4% per annum. If you only have 100,000, or if you only intend to keep 100,000, do note that 100,000 now will only yield you 3.375% effective interest. Wow, so the cut is actually from 5% to 3.375%, which goes to show interest rates could really be coming down tremendously in the coming year ahead. And to this point, maybe if you have been keeping only 100,000 and moving out your surpluses, you can consider maybe when your T-bill matures to pump that monies back to the UOB One account to reach that 150,000 mark. That could be one way to see it. Or if you would agree with me, I much rather do investments. Focus on the first 75,000, which will yield 3% per annum anyway. It's just too much of hassle to squeeze out the extra 1% following all this tiering. For myself, I've still been with OCBC 360. And OCBC 360, if you were to compare using just the salary crediting plus the spending of 500 on the credit card, OCBC 360 only pays up to 2.5% plus 0.6%, which is the salary and spend category, which means total of 3.1%. However, when you slice this is still inferior to the UOB One account, so that's why I guess they are so confident that after they cut, not many people are leaving the system. And to this point on OCBC, you would realize at the bottom when they do the effective interest demonstration, they always have that save category, correct? Because what they want is for you to increase your average monthly savings by at least 500 per month. That's where you yield that extra interest. Plus, a shackle that confuses your mind. You're never going to grow rich putting monies in bank accounts. Don't get too used to locking up monies, because when the interest environment comes down, you'll be left stranded and not familiar with current investment tools again. So I guess the winner For this segment, if you have 100,000 of cash savings and you fulfill salary crediting and credit card spending, UOB One account might still be the place to keep your monies, at least for the foreseeable future. Let's switch gears to address the situation if you do not have, for example, a consistent salary or you do not use too much of credit cards. Which are the best high-yield savings account that you can look for? I'll use this finding by Sidley, which is based on a 10,000 balance and 2,000 salary credit, 500 per month credit card spending, and 3 gyro payment bills fulfilled. Who are the winners? And right at the top, surprisingly, is actually Bank of China's Smart Saver account. My wife uses their credit card, and I'm actually not too excited about the user interface. So I'll still vote for either the UOB One account or the OCBC 360 account shaded in green. Over there, you also see StanChart's Bonus Saver account. But based on the voting in our Telegram group, it's not too popular. So let's skip that. And I've also heard of votes for HSBC Everyday Global account. Having said that, feedback has also came in that it is only good if it's paired with the Everyday Rewards card. And there's certain hurdles to cross. Which brings me to the point. Possibly, if you have only 10,000 of saving and you do not have either consistent salary or use too much of credit cards, maybe the better options lie with the digital banks. In this comment over here, YH has voted for Maribank, which pays 2.88% without any frills. The interest is also credited every day. So let's pull up a quick summary table between GXS, Trust, and Maribank. It is clear that right now, Maribank at 2.8% is superior. I've actually went to do a download of their app. It's actually very user-friendly, and I'll probably be depositing some amounts there. Do note, this 2.8% is a promotional rate until 30th June 2024, of which they could reverse back to their prevailing base rate of 2.5%, which is still actually the best of the three. So if you're looking for a referral code for Maribank, check out my links below and see if it fits you. Do note, the maximum deposit is $75,000. And just as any bank accounts, SDIC covers up to the first 100,000. Up until here, if I've missed out on any good bank accounts, leave in the comment section so that we can all learn. And I'll next move to a category of you who have big savings amounts inside bank accounts. For example, you have more than 150,000 because UOB One account works well for 150,000, right? What if you have 200,000 for example? Then maybe the OCBC 360 might have some appeal because they have this grow category. If you fulfill the salary, save, spend, and grow, which is to maintain a daily balance of 200,000 at least, you would realize that you can earn up to about 3.3%, which equates to $552 of interest earned. When I went to test around this, I realized that as you scale up the amount saved, the effective interest gets lower because the 250,000 savings amount inside will only generate $605 per month, which equates to around 2.9%. That is why if you have bigger savings accounts, I guess the premier banking side would have better solutions. And one of them, which is very popular with my private clients, is actually the OCBC Premier Dividend Plus Savings Account. Let me pull it up for you to see. If you were to contribute 3,000 per month and make no withdrawals, you stand to earn up to 3.3% per year, per annum, and this has no caps in terms of what you can jam into the account. But while the interest is actually very attractive, I'll still advocate again, don't get hooked by interest income. It's just money is lent to the bank because you don't know what to do about it. I'd much rather share how to invest and acquire assets. For myself, I've right now 450,000 in my CDB account owning Singapore stocks. Some of them have done well, some of them haven't. And in this journey, the average dividend yield is definitely more than 3.3%. All I need to get used to is market volatility, correct? And who knows, there could be surprises whereby one or two do exceptionally well and create substantial profits. Let me know if this message resonates with you and smash on subscribe to stay tuned for more quality investment content. And I'll end off with this point. Previously, as shown at the start of this video, the OCBC Premier Dividend Plus Savings Account was actually paying 3.7% per annum with just a crediting of 2,000 per month. The hurdle rate is actually now higher than previously, and there's no guarantee that they won't raise the hurdle rate and cut the interest in the coming years ahead. This screenshot is actually from one of my previous videos that was pretty viral, and I don't know if you've seen it or not. That title is actually CPF could see big outflows in 2025 as a consequence of no more special account. If you haven't seen it, check it out because I've actually mentioned about this savings account in that very sharing. Take care as always, goodbye.